Good morning, good afternoon, everybody. How's everybody doing today? Gonna get going in 2 minutes. Just let a couple more people join into the room. Okay, so just I'll be back in a couple of minutes. I'm looking right now at the yen pairs. If anybody who's watching right now, but we'll take a look. I have some break-even stops in, and we're getting close to them. So I'll go over the trades with you in a few minutes. Thanks. Okay. Hey everybody, how's everybody doing today? Okay. Uh it is Wednesday morning, the 26th, and I'm doing a little bit of trading, picking around here. I have the yens up right now to show you. I want to get right into some trades that I'm in. Now, I have taken off a good portion of my position already, and I do have my stops in right now at break even. We are in the vicinity. I may get stopped out at my break evens, but I've already taken some profits off the table. And I am short. There was a lot of strength in the yen. I want to focus right now on the yen pairs. Guys, take a look. Okay, if you can see my screen in general right now, I am short Aussie yen. I am short Kiwi yen. I am short from this area right up here, this area right up here. Unfortunately, I was away. I did not get the best entries. Best entries were a little bit higher on both pairs, but they were good enough entries for me as far as being able to get in at a level and then take some profits off before I anticipated some trouble. So the ends were particularly strong, and what's really important here, whether I get taken out now or not, I'm happy sitting short right this second. If I get taken out on the last quarter of my position at break even, that's fine. I have no problem. Maybe we'll get lucky here in the trades that I'm in, and I don't want to call it lucky, um, uh, because there's a rhyme and a reason to them. And let's see whether or not the Aussie yen and the Kiwi yen continue or resume. Let's just say their move down. And let me explain to you exactly what I did here, because this is really key to understanding how to use the Amazing Trader. Okay, so well, hold on a second. Let me just watch as I'm talking to you now. Again, I'm short Kiwi. I'm short Aussie yen. I'm short Kiwi yen. And these are what I have on the board up here right now is all my yen pairs. Okay, these are all my yen pairs. When I say all the yen pairs, this is the yen pairs that when I look to trade, if I'm going to trade the yen, then these are the ones that I look at to trade. They're more liquid. The spreads are tighter. Uh, I don't like trading things with big spreads, and you got one even big spreads. I don't even like trading things with a 1.5 or 2 pip spread. It's just not necessary. Especially now, it's one thing if you're in um, if you're trading a longer term, an hour chart, a 4 hour chart, and you're going to be holding things for a longer period of time than a 1.5 pip spread and a 0.7 commission. It's really not a big deal if you're going to be in trades for a long period of time. But if you're going to be day trading, really getting in and out of things quicker, makes a difference. If there's a 15-point move that you're looking to play, and it's going to cost you 1.5 in a spread and 0.7 in a commission. That's over 2 points in a 15-point move. That's to me, that's a big percentage to play. Kind of swings the odds against you a little bit. So that's why I'm, what I have up here is I have the ones that are the most liquid, the ones with the tightest spreads. And so when I'm ready to trade, this is where I'll go as far as the yens are concerned. So let's just talk about the trade that I'm in. Like I said earlier, I am out of most of them. I did not get in the optimal entries. The optimal entries were kind of more up here. I was not available in front of my computer at the time. But when I did get in and was starting to look at the yen pairs, I said to myself, there's a good risk reward ratio here. I wanted to get short Aussie yen. I wanted to get short Kiwi yen. Both pairs in general have been weak. And what I want to point out here, so I have these are the yen pairs. I have dollar yen, euro yen, pound yen, because this is an important lesson. Okay, CAD yen down here on the right. You guys know I was short CAD yen from the other day. Did great, on that trade. As a matter of fact, hang on a second. I want to see something here. Do I have it up? Hold on. Hang on. This is the. Hang on a second. CAD yen trade. Yeah, I'm going to show you this in a minute. Okay. We'll talk about this in a minute. You guys know, I think you know that I was short CAD yen. Jay showed you the trade that I had sent him yesterday morning before I took off for the day. And I heard Jay did the recording yesterday, did the session yesterday. I actually had a chance to look at the recording to see kind of what went on when I wasn't here. And he showed you a trade that I did, but I don't think he explained it the best. I don't think he was reading it the right way, and maybe I wasn't clear enough when I went out in the morning. So I'm going to review that with you again. But let's talk what's going on right now, okay? And then I'll go back to the CAD yen from yesterday. All right. So I'm looking at all my yen pairs, and the yen in general has been strong. We have it's really Thursday night into Friday morning is interest rate announcements and from the board, the BOJ, and their inflation is starting to pick up a little bit for the first time in ages, and so there is talk about a change in policy finally after many years over at the BOJ, and so there's been some yen strength in the market. Early this morning, at 7:30 our time, I didn't even catch the news, but they spiked against the yen pairs, and that provided a good opportunity to get short. But let me explain something. So as I told you, I'm short Aussie yen right now. You see it on my screen. I'm short Kiwi yen. I want to show. So here's the Aussie yen. Here's the Kiwi yen. And I want to talk about them because if you wanted to get long yens, okay, so the question is, well, where are you going to get your long yen? Are you going to get long yen everywhere, or are you going to try and pick your spots? Okay. So, clearly, you really want to look at what is, if you're going to go long yen, you want to try and pair it with a weaker currency as opposed to a stronger currency. And so how do you determine that? Well, you just look at the different pairs. If you just look at the trend, just look at, and this is just a 15-minute chart, okay? Just a 15-minute chart. But just looking at the 15-minute chart, okay, and on small picture, just because I want you to be able to see this at a glance, okay, and be able to see, some obvious things about how to place things, okay? So right away, if you just look at the 15-minute chart, you see the euro yen has been very strong. You see that the pound yen was very strong up until this areas. Now, we did set a directional indicator up here, which gave you a good opportunity for a short. We sent you a directional indicator up here in the pound, which gave you a good opportunity to get short. And I recognize that. I did not do either one of those. And the reason why I didn't is because I chose to go with the weaker currencies. And so now look at the difference between the charts. Okay, so here's the Kiwi chart, all right, from left to right pointing down, right? Here is the Aussie chart from left to right pointing down. So even, and I'm going to get to the longer time frames in a second for you, okay, because that's important as well. But if you're going to go short, if you're going to go looking for an area to go long yen, right, then you would choose, to me, you choose the Kiwi yen, you choose the Aussie yen, which, and I'll show you the longer term charts in a second. Why? Because the euro yen and the sterling yen, at least today, were showing a lot of strength, right? Euro and sterling in general are stronger currencies than the Aussie and the Kiwi right now. So if I'm looking at, and these are my yen pairs, right away I'm saying, well, I want to get long yen, I'm looking at my charts, I want to get long yen. Well, you know what? The Kiwi yen, the Aussie yen, all right, are more obvious areas to get short or easier areas to get short. Now, what I really want to show you is let's just take a look at the Kiwi yen, okay? Because this is also very, very important. Now, if you notice, we're bouncing off a lows here. Not only that, we have a directional indicator. All right. Now, and I'm short. I am not playing this long. Okay. Now, why? This is a very important lesson. Okay. When we talk about directional indicators, and you say to yourself, well, okay, do you play a directional indicator at the high or low of the day whenever you see it? And, to tell you the truth, you can. It's not my favorite trade. And let me show you why. All right. Look out. All right. Please remember. All right. Even though we are talking day trading. Now, for those of you who are trading on a longer term, that's fine. Okay. But for those of us that are looking to get in and out of trades during the day, all right, then we got to look at things, a little bit differently. Okay. So why am I not going to take this long? Okay, or for this directional indicator, which right now is holding, and you may have a move up. Problem is that you're really in a look. I mean, just look at what's going on. First of all, here's a 15-minute. Look at this move down. Okay. And you know how we talk about previous lines and highs before lows and lows before highs and things like this? It's very helpful if you open up a chart like I'm doing right here and you get a feel. I mean, look at it in a bigger picture. Take out some of the noise. So what do you have? You have a move up and you have a big move down. Okay, look, down, retracement, down, retracement to this line, down, retracement to this line, down. Okay, this line was barely really took this area out. Okay, came back up, down. All right, so that's your 15-minute chart. That's a chart tells you really want to be looking for areas to sell. But more importantly, let's open it up even further. Okay, and why did I pick the Kiwi yen? Well, look at the 4-hour chart on the Kiwi yen. All right, now when you see this, I mean, you have a unconfirmed line right here, which is in. But other than that, we took out the low for the day. Look at the strength, well, weakness, the strength, the weakness, let's just call it, of the Kiwi yen. Okay. Now look at this move here, retracement up, new low on a 4-hour chart. Look at the strength in the 4-hour chart. We took out one key red line. We took out the low of last, this is the 4-hour. So this is the low of last week we took out. So look how weak this is. When you see this, all right, you got to be very careful about whether or not you want to do a 15-minute low of the day trade, okay, even off of a directional indicator. Okay, this is not the ideal area. This is the area when you see a chart like this on the 4-hour, right? You're looking for an area to get short, ideally. And then what you'll do is you'll look for a shorter term time frame where you can get in, possibly into your short. All right. You don't want to be picking the bottom here. Just look how weak this is. So here's your 4-hour chart. Look at all the strength. Well, again, weakness, whatever, however you want to refer to it. Okay. But look at the weakness of Kiwi yen. All right. So now this is a 4-hour chart. So would you rather be doing, now let's go something. Now let's go take a look at the euro yen 4-hour chart. Okay. Here's the euro yen 4-hour chart. Look how strong it is, right? hit a high up here, great. All right, earlier in the week. So what? We took out last week's high. We came down here to a key line, right? Previous low before a high, right? This was a great area for support, and look how it held. Guys, there's nothing magic. Please understand there's nothing magic here. Think concept, think high, think bigger moves. Just try and visualize the noise. This is why it's great to open up your chart. Okay. There is no magic. This is a move up. This is a swing low. Okay. I didn't know it was going to stop here when it did, but when it did and came all the way up here, set a new high, this became a very, very key line. And this is a line that you would expect to support. Now, it doesn't always, right? Clearly, it doesn't always do that, right? That's trading. Nothing is 100%. But the point is that why would you look to go short the euro yen? Here's the 4-hour chart when you could have gone short. A second. The Kiwi yen, okay, which looks like this. So, so if you're going to be going short one of these yen pairs, look at the difference, okay? And why? So once again, here I am now. Let's see what's going on because we're coming down to new lows. So first of all, so lesson number one, okay, lesson number one from this is when you're looking at the yens. All right. If you're sensing yen strength and you're looking for areas to get short yen pairs, okay, then you're looking for a chart that looks like this as opposed that looks like this. That's all. This is just a better probability trade. All right. So you still have your yen strength, but you're going with the overall flow as opposed to against the overall flow. So what does that mean? So now let's take that a step further, okay? So how does that really now affect me? Well, when I see this, and I know you got this big opening here, okay? I am very reluctant, okay? Look at this weakness. I am very reluctant let's go back to the 15-minute, okay, to try and pick a bottom, even if there's a directional indicator on a 15-minute chart. Maybe there's a small trade you could get into, but you're swimming against the tide. So try this when and let me see if I'll look to see if I can find another area for you where I can give you a good example. Okay, and now we're breaking through new lows. That's why. Okay, here we go. Okay, that's why you're not looking to play a directional indicator. Okay, let's see what the Aussie looks like. All right, once again, we have, okay, here's the Aussie yen. Let's just take a look. I want you to see the same thing. Let's look at the 4-hour chart. All right, this is what the 4-hour chart was looking like. All right, so why, if you're going to get short a yen pair, you want to be hopping on this kind of a move long term. Now, you don't always have that, okay? But the point is we try and line up probabilities. All right, probabilities of success on a trade. And so when you have the 4-hour chart showing you a big down move, all right, your probabilities in a trade is to be able to find an area to get short, not to be looking to pick a bottom, even if it's on a directional indicator. These directional indicators at the high or low of the day, when they're great. Okay, they're great when you're in a retracement. All right, and so it's I'll have to see if I can find something to show you. Let me see if there are any questions. Hope you guys are getting this. No questions. Okay, all quiet this morning. Okay, so let's understand. Here's the 4-hour chart. I'm going to review it again. I'm sorry if it's being repetitive, but this is how this is how you pick a pair. Now, here's the 4-hour on the euro yen. Yeah, you know what? We may be developing a directional indicator right here. It's unconfirmed. It's a 4-hour. Okay, we may be developing a directional indicator here. Your target may be back down to this area, but you're going to have to take out this area. This may happen. All right. So please let's understand this may happen. Okay. But you're going into a really, really strong move. And, especially when you're looking at longer term charts. All right. You got to remember when the longer term chart you're looking at, okay, this is important. The longer term chart you're looking at, the more traders in the market are looking, okay? Because you got people that are short-term scalpers, maybe looking at 1 minute, 5 minute. Then you got, kind of little day traders who may be looking at 5, 15, and maybe the hour. You got swing traders who are looking at hour and 4 hour. And then you got longer, position or traders, okay, who are looking, they're looking at daily charts. They don't do anything outside of daily, and they're checking daily and weekly. The point is that everybody on the lower end of that term code, is also looking at the higher ends. Okay. So if you're looking at a 15-minute or an hour and you're approaching a weekly, you're also looking at the weekly, right? The guys who are looking at the weekly and the daily, they're not worried about 15-minute charts or 1 hour charts. All right. That's really important to understand. So the longer the time frame, if you're seeing a strong move, that means there's a lot of big money in that move. Takes out the wiggle room that you see in between, all right? And you need to respect that money. So here is the move on the 4 hour. So once again, this is the euro yen. Now remember, we were looking at euro yen off of last week's high, right? If I recall directly. And we were talking about that, but if you look, interestingly enough, because what we didn't look at, and which was I was looking at afterwards, let's just check out the weekly. All right, take it out. Okay. So when we were looking at the 4 hour, this is another lesson in AT and in any trading, really. So when we were looking at the 4 hour in the euro yen and looking to pick a top, all right, well, right, up here, top of a trend for a move, and we did get ultimately, I don't remember where we were looking, to be honest, exactly, right in this area. You know what? I don't really recall last week, but somewhere in there, and then we had a little move down. But you know what? Here's the move was still up. The problem is if you look at the weekly, this is key. Okay, we had a real good target up here. All right, from the week of where is this? October. So going back from October, we had a real good target up here. And you know what? It was very tempting to attack that target, the weekly high, and it did. And now it's falling off. Okay. Now, again, euro has been very strong. So it's not my first choice. All right. To be the one to go short. Hang on. Okay, so what do we have here? So here's the Aussie. Now, all right, let's go back. What do we got here? Okay, so now, any questions? Let's take a look. Okay, no questions. You guys are quiet this morning. I hope that means that this makes sense to you. But so look what we had here. All right, beautiful move. And you know what? I'll sit short. Yeah, right now, Kiwi. I have my stop in. I took out. Now, what did I do? I had taken out most of my position, quite honestly. I was short one lot each, one standard lot each. My stops were up here. I just wanted to get short. And so short one lot each. I did take off, a bunch of it down here, at the lows. No question. And why? Why push it? Why push it? I took it. It was starting to make its move up, back up. I was like, you know what? I got out of my position and let's just see, I was picking around. So I got out of it. Where was it? This is Kiwi. Where was Kiwi? Yeah, it was Kiwi. So you see, I got out of it. I got in it. I got shorted at 81.85. And I got out right around, here at the low. Well, at the time, it was the lows, 81.65. So I got out around 69.72. Got my profits, all right, and moved on, especially in these markets. Boy, this thing is ugly, isn't it? This is ugly. So let's just see now. So 15 minute, I got nothing below us. See what else is going on. 1 hour. Free for all. Free fall. Okay. So you tell me 4 hours. Let's see. So I want you guys, oops, exposure. All right. I want you to see this. All right. So it doesn't matter what time frame you're trading on specifically. All right. But use the larger time frame to give you a sense of the bigger picture. Because if you want to go short, whatever it is, just think about it conceptually. Okay. If you want to go short, right, even if you're looking at a 15-minute chart as an entry point, and this is just in general, how you use it, use any lines, whatever. If you want to go short, then on a 15-minute or on an hour chart, and you're looking for a day trade, or you're looking to hold the trade for today, or maybe today until maybe tomorrow, or something along those lines. If that's what you do, okay, then you want to look ahead at the 4 hour and the daily. And the best trade is when the 4 hour and the daily look short, right? That's the best trade. That's why it's important. Okay. So you can have the same setup on a 15-minute chart and it looks short, right? But if the 4 hour and the daily are also looking short, that's a better trade than if the 15-minute chart looks really short. Okay. But the 4 hour and the hour are either mixed or pointing in the other direction. So you have the same 15-minute trade, same chart pattern, same lines. One trade is better than the other. All right. When I say better than the other, sometimes they'll both work out. That's great. No question. Okay. But one trade has a better probability of working out. Now, you can't always find that, okay? Oftentimes we're in retracements, okay? And so you gotta be, you gotta be careful, okay? Because you can't always find it. But if you remember that every pair in every time frame, if it's moving relatively normal, okay, it's a stair step pattern in both directions. So if you're in a 4 hour chart and you're looking to go short, you're better off waiting. You're better off. Okay. You want to be in, I mean, just here's the 4 hour chart. So even wherever you are, okay, even if you're just getting to the market right this second and you're just opening up, all right, and you're saying to yourself, what do you want to do? And you're looking at this chart right here, you got daylight. Okay. I mean, you got daylight. I don't know where it's going to go. And remember, you have some very important Japanese news, yen news coming out. It's Thursday night, actually, 1 o'clock, 1 o'clock in the morning, either Thursday night in the US, which is Friday morning, technically 1 o'clock, is when the BOJ announcement comes in. And now you have all new leadership in the BOJ. And they very well may be changing, finally changing a very long standing policy. And this economic growth and the inflation, they have not had an inflation problem in Japan in 40 years. Okay. So, it may be time in this cycle, all right, even for Japan, that they have to start looking at raising rates. They've been the last holdout. And so they may be looking to having to start raise rates. So now what's been going on is, people have been, climbing into the carry trade once again, which, why not? All right. You go long a high interest rate currency and against a weak interest rate currency. Okay. You carry the float. You're buying, you're buying dollars, you're selling yen. Okay. Great. I mean, that's kind of where you want to be. Okay, which is why we were up at where we were on the dollar yen. So let's see what's going on. Hope that makes sense. Any questions? Anybody? So you know what I'm going to do right now? All right, I want to show you. Hang on, let me do a new. Hang on. Let me once again. Oops. Hold on. Oops. Sorry. Let me see if I could do something here. Screen sharing. You share. Paint. Let me bring this up now. Okay. Guys, hopefully you should see. This is the chart I sent to Jay yesterday. All right. And asked him to show you when because I was going out and it was a trade that I had just put on now. Hopefully you can see it because Jay really couldn't see it before. All right, I guess. So first thing is let's just take a look. It was a 15-minute chart. Okay. So all you had to do was kind of move the chart up a little bit and you could have seen. So number one, it was a 15-minute chart that I was looking at. All right. Nice and easy. Let's start with that. All right. You can actually see right here what I was doing. All right. Now this was CAD Yen. Okay. And so here's the 15-minute chart. And take a look at what we had. We had a big move down, okay, low. All right. We set a new bar right up here. Okay. We started coming down again. Okay. We set another new low, right? That made this line right here key. Remember, okay, this is the last high before the low. So we're having a big move down. Very weak signal. Okay. We set a new low. We're coming up. I was looking for an area to get short. When you have a move like this down and you're waiting for a retracement and you don't see it here, this is an area where I kind of use sometimes my Fibonacci to get an idea. But once I set this, over here, all right. Once we had this, even though it wasn't confirmed, we had an unconfirmed line here on the 15-minute. Now, because we had such weakness, and once again, if I would have shown you the rest, hang on a second, I want to see what's going on here on, sorry, guys. Bear with me 1 second. It's just, I want to manage this position. I want to be smart about it. You don't like to hold on. 50 minutes. Let's just see what's going on here. Okay. I'm going. All right, I'm going to stay with it for a couple of minutes. Anyway, so let's get back to this. I wanted you to see this. I need to paint again. Okay. So I don't know if you're seeing it. If I could, I don't know if you see my cursor moving, but the price is in here. Here's the point. Okay. Here's the trade. Move down, 15-minute chart, set a new blue line. Okay, retraced up, set a new blue line, then set a new low. Made this line the key line before the high, before the low. I waited for a retracement up. I saw a unconfirmed line, but I was waiting for an area to get on this short bandwagon, put the short on with the stop right above the blue line and a take profit below. So everything was here. It was 3 lots. I was short at 98.70 with a stop loss at 98.93, 23 pips, take profit of 98.42. Okay. And let's go to the cat. And needless to say, we're at 97.65. Okay. So needless to say, and this was yesterday. Okay. So 98, where was I? 98.70 is we're at 90, kind of right around here is where I got in, and look what happened. Moved down. Easy trade. Okay, guys. Easy trade. Yesterday's trade was easy. That was a great, amazing trade to trade. So hang on a second. Well, oh, wait, I have to switch back. Let's do a new share so that you can see that. I apologize. Okay. Let's make sure you got the right thing there. Sorry, guys. ACAP demo. Let's do that screen too. Okay. All right. Just make sure I'm sharing the right screen. Any questions? Okay, let's see. So let's take this off. Okay. All right, good. All right. So I'm sharing the right screen, you guys. All right. What time is it? 10:36. So we're getting a little, a little 10:30 in the morning reversal, whatever. You don't want to overstay your welcome. I still like being short. This is the move over for today. I don't know. Still like being short. I'm only short point a quarter of a lot on each position. So, you know what? It's just 10,393, 10,300. Okay. Just want to just take a look. See CAD moving up. Now they have the N pairs weakening a little bit, makes sense. 1037. The original action of the morning, 9:30 when the markets open. Well, you know what? Let me show you something now really interesting. Okay. Now, this is why I'm going to hold these pairs at this point. Nah, I take it back. I take it back. Sorry. What I was going to say is that, my stops back here at break even or above this blue line and this blue line. This blue line and this blue line right here, they're important, but they're not as important. All right. I wish this, when I say I wish, okay, if this move down would have been a new low and then came back up and set the blue line, making this then the high before the low. Right now, the key high before the low is still up here, right? Looking at the Aussie, the key high before the low is still up here. Here's where the move started. All right. So basically, I have my stops at break even plus a pip on the trade, but I wouldn't enter a new trade. Now, this is important. Okay. I would not enter a new trade right now, right here, and put my stop over here and look for a move down. All right. I want you to understand the difference. Let me open this up. Very important. Okay. The key line. Now, once again, all right, if you're looking to do the highest probability trades, this is really important. Okay, there's a variety of different, we take a few different things into consideration when we're looking at trades. And the highest probability trades are when certain conditions are met. Okay. So when I say that, what is the highest probability trade? Okay. Just looking at this 15-minute chart. Okay. Move down. Here's your low. Move back up over here. Right up here was a great trade. Why? We have the high. We had to move down, move back up. It's essentially the same high, right? Continued move lower. Very weak. That's a very weak pattern, right? Move all the way back up. Now, along the way, it's very possible you could have gone long here and made some money. Probably had a directional indicator right over here, all right? And you would have had an opportunity to make some money, but you had to understand the whole time in this move that you had to be out. If you're going long here, then you had to be out by up here. That was your trade. All right. Now, does it mean it wouldn't have broken through or couldn't break through? Yeah, of course it can. All right. But that the high probability trade that if you're playing this retracement long, that you got to be in down here because you know you got to be out by up here. You have to have your profit well intact by up here. All right. Otherwise, you can't make the trade. So that what does that mean? That means you can't be going long over here. You can't, yeah, and the longer you follow this move up, the less, okay, because remember, look at the big move down. All we're doing right here is a retracement. The longer a retracement goes on into a key move, the worse and worse the trade becomes as a entry, okay? You're looking to go short up here. That is your high probability trade. Now, it doesn't, a swing high, all right, big move down, swing. Look, this is a beautiful swing high up to key previous lines. This is a high probability trade to get short. And this is the type of trade that when you really know how to use the Amazing Trader and you really get comfortable trading, this is the type of trade where you can get a lot more than a 1-to-1 risk reward ratio. Okay. Because if you are getting in up here, here was your opportunity. All right. Right over here. The best opportunity, even if there was no line here, you came down a little bit. All right. Formed a new line here. This line confirmed right over here. Okay. Remember, this line confirms, which started at this. Let me open it up so you guys can see. Okay. What was I looking at? Okay. This line, okay, right here, confirmed at the close of this candle. So closed right around over here. Excuse me. This is the area that I was looking at. Sorry. You can make it smaller again. You guys. Don't mean to confuse you guys. Okay. So we're going back up to we're going back up here. Okay. So hang on. I want to just see it clearly. Okay. So it's kind of back in this area. Okay. So look at the move. You had your move down from yesterday, move up into key lines, right? There was plenty of opportunity right here, right? Plenty of opportunity to go long. Now, all right, double lesson for you. Okay, double lesson. All right. Once again, on this move down, you have to be careful. You're following the lines down, but the further away you get from a key line, all right, the more you have to be prepared for a retracement. So, if you were getting into a short position based on these lines, you got to make your money here. I know it seems obvious. You got to make your money here, or at least most of your money, where if you're still looking very, very short, you take off some of your money and you put a stop at break even. Okay. But then the real trade, now we had a bottom yesterday and then a move back up. Plenty of opportunity to go long here, but the opportunity is down here. All right. And so your target is always, if you're going to play a reversal, you must be out by the previous key line. Right. Doesn't mean you can't play the retracement. So if you're playing the retracement, you have your target would have to be up here, these key lines, and you would have to be out. Now, when you have a big move down and you're fortunate enough to get a retracement to a past swing key area, you can wait. You don't have to rush. You can wait, make sure this area, this is a 15-minute candle, okay? So you can wait, which is almost an hour and 15 minutes. You can wait, okay, up this move up here. See this, wait up here. We formed another blue line right here. When did this line confirm? At the close of this candle. So where was the trade? Here the candle opened, stop above here, move down. And that was your trade. And we'll see if there's any questions. Guys, quiet today. You're making me work hard. To answer your questions, the more guys, the ladies and gentlemen, excuse me, Oops, hold on. Hey, I showed this to you also. Please remember, if you have a lot of windows open or a lot of different charts open, and you ever get, this kind of a message all of a sudden out of the blue on one of your charts, okay, that you're not connected, just very simply just go to that chart, just switch time frames, and then you can come right back. Okay. You see that? Any questions? Hey, that means I'm assuming you guys are getting everything I'm telling you, which is great. Okay. Because this is as good. This is as good. I mean, these were easy trades. All right. I'm gonna say easy. High probability trades. That's all. High probability trades. And you just tighten this one back up. Now I'm just looking at the ends. Okay, for right now. Hold on. Yeah. Yeah. I'm sorry. Okay. So what am I going to do here on my yen pairs? Okay. Even though, okay, like it again, let's be really, really clear. Okay. Is this line your key line? No, doesn't mean it won't hold. Does not mean it's not an important line. All right. I would not initiate a new trade here, counting on this line to hold. All right. If you're looking to go short right now, I would wait to get a confirmation, all right, that this line is going to be intact. I am not ready, all right. I would not be ready to add a short position based on this line. I would add a short position based on these lines, but you would have to wait for the pair to get up here somewhere in order to do that. It doesn't mean that this line won't hold. I would be observing this line. I'll tell you this, if it takes out this line, it will probably take out my stop at break even. Okay. But I'm willing to chance that. All right. This is not even on the Kiwi. This is not my key line. Key lines are up here. Doesn't mean that it's not a line that could hold. So because I've already made my money on the trade, and because I'm just sitting right now with a stop at break even on the balance, I'm gonna let it run. Okay, just gonna let it run. All right. If they take out my stop, they take out my stops at break even. Why? This is still a line. This is still a line to trade off of. So again, the importance here is trying to understand that not every blue line or not every red line is created equal. It doesn't mean they're not important. It just means that we're trying to get the best of the best of the best. So what is the best? The best is if you get a very strong looking, okay, 4-hour chart, especially if you're day trading. Hang on a second. I see there's a question I'll get to in a second. Okay. The very, very best. And when you start taking out lines, okay, when you start taking out lines, makes every other line a target. All right. It may not happen, but we already took out this line. It just hasn't disappeared yet. It'll disappear very shortly. This line held. Okay. For right now. Right. No problem. Okay. This line is still a key target at this point. So this is the 4-hour chart. So once again, you want to get short. Okay, you want the 4-hour. If the 4-hour is moving in the direct, if you're looking at a short on the 15-minute, let me just try and phrase it as simply as I can. If you're looking for a short on the 15-minute chart, all right, the odds are better if the 4-hour chart looks like it's going short. It's about as simple as I could take. Now, it doesn't mean you can't trade it. If the 4-hour chart looks like it's going long, you could still trade it because you may be in a retracement. You just have to recognize it. All right. Question. better use of AT would be for swing trade. Okay, let's just see. It seemed to me the better use of the AT lines would be for swing trades off of a 1 or 4 hour chart where you use the lines to put in the order entries. Um, you know, well, that that may be a better use, well, better, how do I say it? Beauty is in the eyes of the beholder. Okay. So your point here is excellent. If, okay, let me read this for everybody. Okay. Because not everybody sees this. Okay. So I want to make sure everybody gets this. Okay. The comment or the question that I have is, or it's actually a comment, all right, which is a very valid comment. So I want to bring it up to everybody. So the comment is that it would seem that the better use of the AT lines would be for swing trades off of a 1 or a 4 hour chart where you use the lines to put in the order entries. And the answer to that, well, I don't want to say the answer to that. That's not the right way to say that. If that's what, that is an excellent way to trade. Okay. However, let's just talk it through. Okay, let's just talk it through. First of all, the lines that we use to trade work the same on all time frames. Start at that. Just that's item number one. Now, item number two, though, okay, as we talked about, right? The larger the time frame, the more important the line will be, right? And just in any support or resistance, anything you're using to look at. Okay, if you're using a 5-minute chart, that's a lot easier line to break than a daily chart, right? If you know what I mean. Okay, being exaggerating to make a point. Okay, so yes, okay, using the swing high and the swing low on a 1 or a 4 hour chart is an excellent way to trade. Okay, couple of things. Number one, you got to be around when that happens. Okay, in order to pull the plug, pull the trigger, pull the plug. We don't pull the plug on people. Okay, pull the trigger. All right, you got to be around when that's happening. All right, and when you're on a 1 hour and a 4 hour chart, you know, like I don't know how many times, I don't know how long you will have to sit at your computer to watch the trade. Okay. I don't know. You don't have to be around to put in a limit order. Okay, so here's the problem. Okay, so let's talk it through. Okay, so as I'm going through this, I'm going to respond to comments because I think that these are very, very helpful, and I think everybody could really use to hear this conversation. Okay, I don't have to be around to put in a limit order. That is correct. Okay. The question is, what is the size of your order? See, again, what's the size of your order going to be? All right. Yes, you could put in an order. The question is, where are you going to put it in? Where is your stop going to be? And what is the size of your position going to be when you do it? Or are you just risking points? Right. So, and if you're, so the way we trade, there's a lot more to it than that. And you can do it that way, no question. And let me point this out, because this is actually really important. Okay, this is a lot of different people with, and you guys have varying trading experience and various trading styles, and they all have a lot of legitimacy to it. So the first thing I'm going to say to this particular question and questioner in particular is that you are right in the way you're looking at things. All right. If you want to use the amazing trader lines like that, that's fine. And that's great. Whatever makes you comfortable, if you have some prior trading experience and you're looking at the certain use of lines, all right, you can use the amazing trader lines however make you comfortable. All right. But what we tend to not do here, what I try and teach people, and you're right. Okay, what I try and teach people is to be able to enter a trade that has a beginning and an end. So let's just start from our basic core principle, and then we can, and then you can adapt that to how you work with things. So remember, our core principle is that we want to give you an area where you can define your stop loss, right? First important, okay, where you can manage your risk, meaning that you know what your stop loss is, and based on a point on a chart. And now the question is where do you get into your trade? Okay. I'm just kind of monitoring these positions. I'm just as we go through. Hold on, let me get back to we just get some. Okay, see now we do have. Yeah, look at Aussie. Look at Aussie yen coming back up. I don't know that this order is going to hold. I'll tell you this: if well, see here, dollar yen. See, look what's going on to the yens. Okay, so we have dollar yen. I hope you guys see the charts. All right, this is why I have different yen pairs up, so we can take a look and maybe we can prepare. So right away, dollar yen just took out a key line, right? He moved down. Here's your high before the low, and we just took out a key line. Okay, so what does that tell me? That tells me this line is successful. This is the Aussie, and the Aussie I'm over here. So, I'm sorry, guys. I just want to manage this trade while I can. Yeah, you know what? I'll let it in. Took out this on here. You see, you know what? Every nickel is important. Yeah. Hang on 1 second. Now this may come down, but you know what? I'm not really risking a lot, but I'm getting out there. I'm getting out of my positions for now. Hang on. Happy to take my money for the day. Bear with 1 second. Okay. Bad. Just want to try and very choppy markets, by the way, folks. All right. All right. You can have some profits for the day. See, hold on, just take a look. I'm sorry, I'll get back to responding to that question again, and so that we can go over it. Okay. Got to see what's happening elsewhere. When this dollar yen took out the high before the low, I'm like, okay, no reason why Aussie yen can't do the same thing. No reason why Kiwi yen can't do the same thing. Right? It looks like we have some yen weakening towards the end of the day. Look at the CAD yen down here. Now I'm not going long. All right, no way I'm going long. Look at the CAD yen. CAD yen took out the high before the low. Okay, so now what would I do? If anything, you wait for a retracement down, set another low, and then maybe you can go higher. All right, right now, otherwise, these are off limits for right now. All right, especially at 2 minutes to 11. All right, so let me get back. Let me answer it again. Okay. So let me try and be clear. Okay. Yes, 1 hour swing trading. I'm sorry, I'm jumping all over the place for you guys because I got a lot of ways in which I want to answer this. Okay. Question is, I try and teach people how to make money and how to try and make a certain percentage of money so that you can prepare. Okay. So that so when you say you can go long you can use the 1 hour or the 4 hour chart. Let's just remember, okay, the longer the time frame chart you're in, the longer you position, the longer you're going to be in the position. Okay, if you're going to put on a trade and you're doing it off of a 1 hour or off a 4 hour, is the longer you're going to be in the position. So just hear me out on this. Okay, it doesn't make what you're doing wrong at all. Okay, but apply it let's use the additional knowledge that we work with here in order to be able to, to kind of fine tune that a little bit. So if you're going to get in on a 4 hour chart on a swing trade, you're probably going to be in that trade for, at least a day or two. Okay. I'm thinking, that's got to be it. You're going to want to be in your trade at least a day or two if you're getting in on a 4 hour chart. Right now, what's your risk on the trade? Is it points or is it a dollar percentage? Because what we look at is here is we don't want to risk more than 0.25% on any trade, right? That's our risk. No matter what goes on, we don't want to risk more than 0.25%. All right. So that's great. And we're happy to make, on average, 1 1/8. Okay. Why is that? Because if we're using high probability trades or when I say high probability, it doesn't mean they're 90% guaranteed. Okay. It means they're reasonably higher than a 50%, okay, probability of that trade working out. I say it's close to 60, 65, almost even 70 when you really know how to use this stuff. All right. So the point is that if you're going to get in on a trade on a 4 hour chart and you're going to limit your risk to a percentage of your account, let's just say 0.25, and now you're in your trade for 2 days. And the idea on that trade is if you're going to risk 0.25, you want to make 0.25%. All right. Unless what you really want to do is you're looking for like a 5-to-1 or a 6-to-1 risk reward ratio, right? In a bigger move. But our goal is to try and do more trades with a 60%, let's just call it, probability of success to get you to a 60-40 1-loss ratio where you're making a 0.25%, you're losing a 0.25%. Okay. So when you lose a 4 hour chart, and if you're going by that theory and you're only going to risk a 0.25%, then how much are you going to make? Okay. What's realistic? Okay. A 1-to-1 risk reward ratio is a realistic achievement. A 3-to-1 risk reward ratio, and if you think you can trade like that all the time, pretty hard. All right. A 4-to-1, a 5-to-1 risk reward ratio, pretty hard. So what's my point? My point is we're really only looking for a 1 1/4, 1 1/8 to 1 risk reward ratio because those are relatively achievable. Okay. Now, if you're using a 4 hour chart, you can be in a trade for 2 days and you risk 0.25% of your account to make 0.25, let's just say, or to make 0.3%. That's 0.3% you made over a couple of days. Whereas if you're using a 15-minute chart to get into your entry, and you're in and out of the same trade in an hour or a couple of hours, well, now you made your 0.25% in a couple of hours. So what is a better return on capital in a shorter period of time? Well, if you can make 0.25% in a couple of hours, that's a lot better than making the 0.25% in a couple of days. Right? I mean, I hope that makes sense. So while there is absolutely nothing wrong and your thoughts are 100% correct and that may very well work for you, all right, that you are more comfortable trading on a 1 hour and a 4 hour chart. And by the way, very, very reasonable. And you're taking a lot of noise out of the market. And trading off of a 1 hour chart and a 4 hour chart, honestly, I think it's easier. All right. And you're right. So when you say a better use of the lines, just think about it that way and what you're trying to accomplish. I hope this makes sense. Yeah, use a 1 hour, 4 hour chart. That's great. Okay. But if you're going to be risking now, are you risking more than 1%, a 0.25%? Are you risking 1%? Because if you're going to be trading and you're going to be trying to make a living on 3-to-1 and 4-to-1 risk reward ratios, all right, then I think you're going to find that a very tough living to make. My experience. Anyway, all right, my experience, 3-to-1, 4-to-1s, those are nice to get. And there are ways to get them when you're using the Amazing Trader, which is what I've tried to, kind of grab before. But as you can see, the yens are now reversing. That's how trading works. I'm glad I got out of them. So let me summarize. A 1 hour and a 4 hour chart, yes, in my opinion, are easier to trade off of. Yes, the lines have more substance to them. Again, as you're using a longer term chart, those lines, whether any chart, whether it's a Fibonacci retracement or a horizontal support and resistant, whatever technical indicator that you're looking for to do technical analysis, doing them on a 1 hour and doing them on a 4 hour has more quality than doing them on a 15-minute. It's definitely riskier on a 15-minute, but that's short-term trading for you. The difference is, so why do we do that? Well, we do that because we can do more trades. Because if I'm going to risk 0.25% to make 0.25 or to make 0.3, I'd rather do that in a couple of hours than do that in a couple of days. All right. So think about how many trades you're going to do. It's all a question of how much money you want to make or want to try and make. I hope this makes a lot of sense to you guys. So yeah, a 1 hour and 4 hour chart are great. Okay. You're going to be holding the trades for longer time. Question is, what is your risk going to be? How comfortable are you with your risk, your dollar amount or your percentage? Because if you're only going to risk 0.25%, then you really should be very happy and reasonable to make 0.3% on your trade. Okay. You really have to have that ability, right away, especially on a 4 hour chart or a 1 hour chart. So the difference is very simple. The signals are better, yes, on a 1 hour and 4 hour if you're there. But to be able to set a limit on a trade, you're going to have to know, okay, if you want to put a limit in and then a stop loss and know beforehand exactly what quantity you want to use. Because remember, if you're using the Amazing Trader to set that up, all right, you got to be there to actually pull the trigger. It won't work on a limit order because the limit order won't be able to tell you exactly, how much to get in besides your position. So what time is it? So it's 11:07. So this was a great question, and I appreciate it. And I want to make sure everybody's clear. And especially if you guys are struggling. For anybody out there who is struggling a little bit, then you know what? I wholeheartedly agree with that comment. Go to the 1 hour, go to the 4 hour charts. Okay, use those. All right, use those. Still risk your same 0.25%, but we're not going to do as many trades. And then you have to get comfortable with the amount of trades that you're going to do and hold on to, because that's going to limit how much money that you can make, what your opportunity is to make. The more you trade using our system, the more money you can make, because we're looking to get 0.25 out, loss 0.3 in, trade, come up with a 60-40 1-loss ratio and make your money in that direction. Otherwise, you can sit in a trade for a couple of hours, a couple of days. And you know what? And yes, you still risk your 0.25 to make your 0.30. You won't do as many trades. It's harder to do, like I say, like 100 trades. And so it's that simple. Does that answer your question? Yes, very simply. If you're struggling, not just anybody who's struggling, the 1 hour and the 4 hour charts are great to trade off. Absolutely. You just won't have as many trades. That's it. It's as simple as I can make it. And we here look for, we try and teach people how to do a little bit more volume in trading, take advantage of statistics. Okay. So I hope that makes sense. If you want further clarification on that, you can email me personally, Michael@theamazingtrader.com. I'm always around. You can email me personally. Happy to discuss it with you. Otherwise, that's it for today, guys. We will, ladies and gentlemen, excuse me, and we will see you tomorrow morning. I'll be here normal time. And now be careful. Tomorrow we got PCE in the morning. Okay, we have big inflation numbers, and let me just leave you a last thought, because there's we're going to be choppy. I haven't even I haven't even looked to see I've been focusing on these yen pairs, and I haven't even been looking. I don't even know what the market's doing. In a second, let's just take a look. Okay, nothing significant. Russell 2000, by the way, is still my weakest. Let's get off of the yens for right now. So anyway, we got PCE tomorrow morning. Very, very important. We got the Fed next week. We got Japan, the interest rates announcement on Friday morning early. The PCE coming out is very, very important. Next week, we got the Fed in the middle of the week, and then we got the job numbers at the end of the week. We got a lot of information coming out, and I expect a lot of choppiness, both directions. Be very careful. I think once the PCE comes out, once the interest rate announcement comes out next week, I think there may be some more clarity in the market, and we'll be able to get into some normal kind of trading. Right now, very choppy. So, guys, be careful. That's all I can tell you, and limit your risk. It's the only thing I can tell you: protect your account. Never risk more than 0.25% on your account on any one trade. Please, it's the only thing that I can. Until you know, okay, until you have a system in place. All right, and like with us, and I know here we go again. I'll keep talking, okay? But with us, we want you to get comfortable that you can be right 60-40, okay? When you're comfortable, and so how do you do that? The more trades you do, just think about this, the more trades you do, the more you'll be able to gauge your results. And when you get comfortable that you really understand these patterns and you know how to be right 60% of the time, 60-40, okay? We can take you then from a 0.25% risk. Once you have that comfort level, all right, we could take it from 0.25 and move you to 0.5 very, very easily. Now you're doubling your business. Okay, that's not a hard thing to do. As a matter of fact, we people that'll go up to a 1% risk, okay, on a trade. When they're comfortable and they've put in a few hundred trades and they know these patterns and they know they're going to be, that historically they're right 60-40, 65-35, you know what? You can move yourself up to 1%. Now, if you're doing a prop traders firm, always keep your relative drawdown or always keep your drawdown in place. You never want to risk too much. And so if you only have 5% cushion in your prop account, okay, you're not, no matter how confident you are, you're not looking to risk 1% of trade. Okay, please, because no matter how confident you are, you can always have a losing streak. So keep that in mind. The amount you trade relative to, I look at it, this rule of thumb, okay, on prop traders in general, okay? At least in your first call, most prop trading programs have a 5, maybe or a 6% initial drawdown. Okay, that's your risk. As long as you're as long as you have a 5% risk in there, you don't really want to go higher than risking 0.25% of your account on any trade. Once you start building your account higher, all right, and now you have cushion. And now you have confidence that you're right 60-40, and you have cushion in your account. Okay, you're up, the account, let's just say, is now up, 15%. Okay, and now you have a cushion, then you move it up to 0.5%. And then you could even move it up to 1% as you build your account. So this is how we build the account. This is how we grow profits. So once again, I went 15 minutes long because I like to talk. I just, I'm trying my best just to help you guys see the overall picture. Please ask questions when you have them. Thank you very much for my continued friend who and everybody in the room should thank our continued friend here who participates with us and throws out stuff for us to consider from a client's point of view, from a retail trader's point of view. So thank you for your help. Gives us stuff to talk about. Anything that's on your mind, I'm sure, is on other people's mind. And your question today in particular about using the 1 and 4 hour charts is smack on. Okay, you just won't do as many trades. Okay, smack on. Okay, thanks very much, everybody. We will see you tomorrow. First thing, good luck trading, but be careful. Okay, markets are very, very twitchy, especially the next couple of days into next week. Just be careful. Limit your risk. That's all. Don't move stop losses. Not everything comes back when you want it to. All right. Have a good day, everybody, and we will see you tomorrow.